Hello everyone, my name is Saiwin Nai. Today we are going to talk about the Olympus scandal, and we separate this into four parts. First part gonna be about the background, the second is ethical issue, the third part is the principle, and the last part is about the conclusion. First, what happened to the Olympus? The Olympus Corporation is Japanese major producer of optics and medical equipment. The Olympus was found on 12 October 1919, which is more than 100 years now. The scandal was one of the biggest financial fraud in Japan history. The abnormal transaction could be traced back since early 1990. More than six executives sacked by Japan Olympus and have been ordered to pay more than $500 million in damage after a massive accounting fraud, for example, concealing loss. Some of the transactions were generally had a little connection with the Central Olympus business and speculate on a connection to the Yakuza. Thousands of people went jobless. 80% of the Olympus stock market had dropped and raised huge concern about the corporate governance and transparency of the Japanese financial markets. After the former chief executive Michael Woodford exposed his colleague Tsuyoshi Kikukawa for falsifying accounts to concealing loss. And next part we're gonna talk about the ethical issue, which principle involves. In this case are integrity and objectivity. The management team, external and internal auditors in the Olympus Corporation are not doing the right things. They are not being honest in the professional and business relationship. They are all influenced by financial interests, which lead to self-interest threats.
Okay, here are three principles, and my talking is about the first one. Lay solid foundations for management and oversight. To explain it, solid foundations is that the responsibility of planning board and managers should be clear. On the one hand, it is necessary to have an appropriate framework for management to report relevant information to the board. Once any bad situation occurs, the board can be quickly informed and responded promptly. On the other hand, regular reviews are essential. It is needed to maintain sufficient transparency to allow managers getting adequate supervision. The implementation of various important decisions needs to be disclosed so that shareholders can be aware of it and prevent managers from abusing their power to seek personal gain. Now let's talk about the relevant theory. The principle is based on agency theory, which involves the agency problem. According to the agency theory, the owner of economic resources is the principal, such as the shareholder, and the person responsible for using and controlling these resources is the agent, such as the manager. The interests of the agent and the principals are not exactly the same. Agent problems can be grouped into the following four categories. The first is degree of effort. It is pointed out that workers usually prefer the benefits of leisure until the marginal benefits of leisure is equal to marginal cost of losing income. The second is term of office problem. Relative to the manager's limited tenure, the company has a longer life period. Shareholders are more concerned about the cash flow in the future. However, the achievements of managers during their tenure depend to a large extent on the current cash flow. The third is different risk appetite issues. The situation of managers is closer to creditors. When the company is in financial crisis, they will lose more. But when the company's earnings rise, their benefits are fewer. Therefore, they have less risk appetite than shareholders. And the fourth is asset using issues. The motivation for managers to over-investment is very obvious. In this way, they can obtain excess cash flow, but it may cause much more risks when it is in economic bubble. So how can principal prevent this business scandal? The problem of Olympus is that corporate governance is flawed and the auditor work cannot be carried out effectively. During Japanese economic bubble, Olympus took large-scale financial speculation as an important business strategy for the company. As the financial department are controlled by three managers, they did not let other departments know the problem of financial department. So when their investment burst with the economic bubble, they hit the loss by transferring it to another company. This problem covers the four issues mentioned above. The behavior of the directors and managers need to be sufficiently transparent to the shareholders. That is, shareholders can clearly know the manager's business progress. Such regulation will make many decisions made by managers in line with the mutual interest of both parties. Thereby, it will take the opportunistic tendency of the managers and reduce agency cost to maximize shareholders' wealth.
Good afternoon, my name is Hu Su Jie. I'm going to talk about the second appropriate principle, the board to be effective and add value. The principle is about board of directors need to have appropriate skill, including the board members' skills, knowledge, experience, independence, and its industries related skill and commitment to effectively perform their duties and additional value. An efficient board of directors for the company is very important. Next, the relevant theory is agency theory, which also involves agency relationships. The relationship is between the directors and the shareholders. Shareholders authorize the director to make key business decisions, grow, and maximizing long-term corporate value. This means that the directors is placed in a position of trust and responsible for acting in a good faith. Olympus' board of directors should be composed of independent directors to prevent business scandal, especially if the same person also as the CEO of the company. He is unlikely to help the board efficiently to meet its challenge to the management and let them bear the responsibility of duty. Now I'm going to pass to my group members. Wei Jian.
Principle 3. Instill a culture of acting lawfully, ethically, and responsibly. Principles and corporate governance policy are extremely vital for a strong corporate governance structure, and it is important that no exceptions are allowed for directors or senior executives. Each employee in the company should act lawfully, ethically, and responsibly. Principle 3 in ASS recommendations has suggested that an entity should state clearly the policy and the core value of the entity. The entity should have and disclose a code of conduct or a set of rules for its directors and senior executives and employees. All the employees of the entity should act consistently and honestly with high standards of personal integrity, follow the code of conduct, and comply with all the regulations and laws that apply to the entity when addressing issues relating to the entity. Relevant supporting theories. In agency theory, the managers or the executives of the entity are acting on the interests of their own instead of acting or representing the interests of company's shareholders. Addition on such self-interest behavior, the managers of the company will tend to show their good performance in the company and cover up the negative effects of their bad performance in order to receive bonus or rewards. Principle 3 in ASS suggests is meant to prevent such behaviors to ensure that the agents or the executives of the company are acting on the interests of the shareholders. In stakeholder theory, the shareholders are no longer the only party that an entity should be responsible to. Impacts of an entity's decisions will be widely spread out and affecting the parties other than the shareholders, such as employees of the company, suppliers, customers, or creditors. In legitimacy theory, an entity will be only allowed to operate under supervisions of local laws and regulations, and an entity's operations will be affected by changes of regulations and laws. Also, the manager's decisions will not just about to increasing the shareholders' profit, but unlawful, unethical, irresponsible behaviors of managers of the entity will betray the trust from the public and breach the regulations and laws. To prevent the business scandal by implementing the principle into the company's corporate governance structure, the entity will have greater possibility to stop an unlawful wrongful behavior in an early stage. All employees of corporation will have noticed the obligations and the responsibility they have when they discovering unlawful or material misconduct that will damage the interests of the stakeholders. In conclusion, as one of the most serious financial scandals in the history of Japan, the Olympus scandal not only reflects some defects of the company, but also caused people's reflection on accounting system and audit work. It is true that part of it is due to Japan's unique culture and law system, but for the immature emerging market countries, there are still many cautions. It is necessary to deepen the information disclosure system and implement the supervision work. In addition, we should strengthen internal control and improve the corporate governance structure.